I think the market's at a potentially critical area. If they get much below the plus 200 range, the rally could be in a little bit of trouble. I think world events kind of creeping into this. The president, out of respect for the late President Bush, has limited his tweeting and commentary and said he was not going to tell people how great the deal he struck was until after the funeral. So we're lacking some pieces of information, and we're also not getting a lot of clarity on the Chinese side. They're not being forthwith either. So this was partly short covering and part people changing their risk profile. You could see late on Friday when an unnamed Chinese official was quoted by Reuters as saying some progress was being made. Off we went to the races, and this is the follow-up to it.
And I think that's sort of a key point. We don't have a lot of those details, and in many ways this is almost just a kicking of the can in terms of those tariffs increasing to 25%. Yes, it buys more time, but do you think it's the digestion of the fact that there's still going to be uncertainty as these talks still continue to happen, and that's what's being absorbed here in the markets right now?
Yeah, I think the markets are beginning to reflect. And the other thing is that while he has signed the theoretical successor to NAFTA, the European negotiations are not going well at all. There's no comment out of there. So you've got two large trading areas that things are kind of wide open. And I think some of that rethinking is beginning to show up in the market.
Meanwhile, still trying to process Powell. Clarida on Bloomberg, I think, either this morning or over the weekend, said that the notion of a Powell put is not a good way to think about how this central bank operates now.
Well, I'm sure they don't want anybody quoting that or saying that. Nevertheless, you know, Mr. Powell was very plain spoken. I think he came out and wanted to tell people, look, we are really data dependent. I'm not going to tell you 1 this year and 3 next year. I don't know how many next year, and I'm going to wait and see where it's going. But Powell did bring up things like global trade and what the impact on the economy could be. So I wouldn't outright call it a Powell put, but it's not very far away from that.
Does it dip below 3 on the 10-year? Is it significant now?
I think it could potentially be. The key thing I'm going to keep my eye on now is crude. You know, you had a rally on the apparent new agreement between Saudi Arabia and Russia. If crude rolls over and begins to sell off again, I think it's going to change the complexion of what we're looking at. And crude will be a factor in Powell's decision also. So, you know, I think December hike is locked in. They can't walk away from that because it looked like they got bullied by the president. But hikes next year, I'm quite doubtful of.
Art, you mentioned being concerned if the Dow gets too much below 200. A bit after you said that, it dipped down there for a bit. I'm wondering a little bit of your analysis on this somewhat anemic, perhaps at least in the early hours, rally. What does that say about either what the market is still concerned about or about whether there's more at work here that was holding things back than just trade concerns?
Well, it raises several possibilities. One is that it could be, for large part, short covering. So the short's covered, and now there's nobody behind them to carry the rally on. You always want to see follow-up. You want to see staying power in a rally. That's why I said I got a little worried when they get down around the 200 level. They get down around plus 175 or something like that. I think you're going to have people start to question and maybe stake out a different area.
The ISM manufacturing number today, stronger than expected, showed growth. How should we think about some of the data we've been getting, and especially looking forward to what will be another very closely watched jobs report on Friday?
Yeah, no, I think the data has been to some degree mildly mixed. You're right about today's data being good. I would caution the viewers to keep an eye on something we haven't spoken about in a long while, and that's initial claims. They've been starting to creep back up as if they're turning the other way. And if they were to creep up again, and if you were to see non-farm payrolls not quite where we're assuming. I think that if I were on the Fed, that would make me second guess what I want to do.
Small caps, they've continued to underperform. How closely should we be watching those?
Well, yeah, you got to keep your eye on them. You know, a lot was taken away by all the China talk and what's going on. But you can tell with the small caps underperforming, it is not an internationalized problem. The small caps basically are domestic and they stay at home. So I think they're worried that maybe a booster shot from a second tax change might not be there, that with the House in the hands of the Democrats, small businesses may not benefit because you won't get that broad sweep from Trump that they were hoping for.